what we think is going to happen is not exponential growth, but super exponential growth as we get the convergence between among technologies out there. This is not just a technology, it's a new asset class. And beyond that, a global monetary system. First, let me tell you a little story about Bill. In 2017, when Bitcoin was below $1,000, and there was a war going on between the Bitcoin maximalists and those focused on the Ethereum network. Chris Berniski, you may know him. He was our first crypto analyst and went off to start Placeholder. He decided, you know what? We should have a meetup at our office between the Bitcoin and Ethereum supporters, and we'll provide rules of the we'll provide rules of the road. And Bill was the grown-up in the room, set the tone from the Ethereum side, and we had such a productive talk that I went out and bought Ether right away. I already owned a lot of Bitcoin because it was so convincing that there's a place for both. We did something called Bitcoin Brainstorm. We do a Bitcoin brainstorm monthly, and one of them was the convergence between Bitcoin and AI. And we had, you'll probably know of his developer name, Roastbeef, from the Lightning Network on, and he was talking about how in Africa already this convergence is redefining division of labor. The gig economy we understand here in the United States, put that on steroids in terms of micro gig economy in the emerging markets, and you have a whole new kind of economy. So yes, very exciting. This is not just a technology, it's a new asset class, right? And beyond that, it's a global monetary system. It is the first global private, meaning no government oversight, digital and decentralized, rules-based, that's the most important word here, rules-based monetary system in history. It's a big idea. Well, we have all kinds of metrics, but when I was at Abundance, the forecast was, our bull case was $1.5 million in 5 years. So that would have been 2027. We still have time. And we still think that's going to be right. If you just look at the institutional push into Bitcoin, this new asset class, they have to consider it as fiduciaries. When you use those code words, new asset class, what it means, the correlation of these returns are very low compared to those of other assets.
Especially as bonds and stocks are becoming more correlated, you need something uncorrelated.
Yes, absolutely. And so they have to consider it. Now, what are we saying? There are 19.6 million Bitcoin out there right now, and the highest it will ever go is 21 million. There's real scarcity value, and what is going to happen? The price increase for every institutional dollar pushing in now is going to be much higher than it was last year, 2 years ago. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is typically when you go through a price move, a Bitcoin price move to the upside, you usually see long-term holders, which is a metric we monitor. It's an on-chain analytics metric. And it means people who have not moved, or wallets that have not moved their Bitcoin in 155 days or more. Yes. Well, normally when you go through a price move to the upside, a very nice one like we've seen in the last year, that tends to start moving down. And it did that, true to form, but it has reversed in recent days because what we learned is GBTC sold some of its Bitcoin. So those wallets hadn't been changed in a long time, right? Now that is done, at least for the time being. Now that is done, and it's going back up again as the price goes up. That's highly unusual. And I think it is because the long-term holder is saying, why would I sell now when I know all these institutions, which own nothing in this realm, in this new asset class, they have to consider it because it is a new asset class.